morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 11th, 2025. I'm Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the ES in the daily time frame. Post-Fed day, this is your previous session's FOMC key level right there, 68.46 for the ES. Price was taken initially bid, rallied to the previous week's high, and we are still within the range as we speak. In after hours trading, a major flush of prices here to the downside, and you can see how price pushed through the previous session's midpoint and dropped to new lows. We've since seen a box reversal off the low back up, and we're now at the middle of the previous session's range. So quite a bit of action here already for this market. But does this price action suggest that we're going to stay within the range? 6,800 up to the recent highs right around 69.10 here. That's your range right now, and we are firmly within that range. Do we see expansion out of that range soon? We have to watch that pivot low right there. If that low is taken out, that's going to be what opens up some big time downside back toward the 65.50 level. And of course, if we do get that upside break, it's a follow through to the upside. As we've noted, there's at least 250 points of energy built up in this range. So when we do see expansion, expect about 250 points of expansion in the direction of the break if we get a good clean breakout in one direction or the other. All right, looking at the NQ, similar price action here. Early bullish response yesterday. A big time flush to new lows here, back down within the range. The FOMC key level 25,614 half. That's your level right there, and we're kind of trading a back and forth on it. Now remember, on these FOMC key levels, the idea is that we're going to get one move away from this level. Typically speaking, is it up or is it down? Once it's done going down, it snaps back to the level. Once it's done going up, it snaps back to the level. You can see right here, this one was taken offered. After the October 29th level, we drop until we get a strong low here, and then we've made our move all the way back. We've almost got it all the way back to 26,255. Perhaps this pullback gets us into that level. So which way do we go away from this level? Again, right now, short term, trending up. That's a big pivot though. If that pivot fails, it opens up the recent lows back toward 24K. So keeping an eye on this zone here. Again, this range right now has enough energy here for at least 1,000 to 1,200 points of range, but likely much more than that once it gets going. All right, let's look at crude oil. This one had a highly bearish response in after hours and pre-market trading here. The FOMC key level here is 58.36. We're currently below it right now. Still within the downward flow of this range. It's been sideways to down. We're near the lower portion of this range right now, and we have basically come into the final portion of the bearish seasonal cycle here. So another day or two, or maybe a couple here, and that's the bottom end of the bearish seasonal cycle, and then the bullish cycle turns into the new year here to the upside into the first 8 to 10 weeks of the new year, depending on how bullish this thing goes. We'll see. Again, perhaps we get a flush to 56. 56 turns into 64. That's a pretty solid move to begin the year. So we'll see what we get out of crude oil. Gold here. Gold still in the range. This is a 100-point range, which is incredible because this market was averaging well over 100 points per day. Now we have 100 points for the last 8 or 9 sessions. We can count these off here, 4, 5, 6, 7, 8, 9, 10 sessions here at about 100 points. I know it's a little more if you add the 10th session here. If you go 9 sessions, it's about 100 points. So let's just do that. Let's go up here. Let's make it 9. And this is going to be the range we quantify here. Look at that right there. 105 points, 45% of ADR, and the potential to see something north of 250 to 300 points of range as well. So whenever we're ready to see expansion from this 100-point range, expect 250 points easy on expansion. And if we fail here through that 4,200 level, That could take us right back down to recent support lows as this thing remains in a large trading range. If we get the upside break to the upside here, then we could be looking at 4,500, 44 or 4,500 up down the road here, especially from current prices. So keep an eye on this compression. Big time energy built up in gold. Looking at the YM, right now the YM, this one's seeing a little bit of a response here. Of course, overall this market here has been kind of range bound up here. You can kind of see the compression over the last couple of weeks with an upward bias. Not quite as compressed as something like gold, for example, but definitely back and forth within the range and approaching the upper end of resistance here. This is your previous FOMC key level here, and you can see it's been kind of resistance lately. After that recent rejection, back to it. We have our new one here at 47,782. That's the new FOMC key level there. You also have, of course, today's inside day, a little bit of a pullback. Which way do we go out of this range? That's the range to watch. Again, if you're looking at an 8 or 10-day compression, we're very compressed, and the potential for expansion is upwards or north of 2,000 points. So continuing to watch the YM here. Looking at Bitcoin. This one's interesting here. Of course, Bitcoin showing signs of weakness post-Fed. This is twice in a row now. The previous Fed here, you saw a rate cut and taken offered immediately. Now you're seeing a rate cut again and being offered immediately. What is this, 3 times in a row now? Perhaps a bit here as well. So are we going to see now that next rotation down, or do we finally break through 95K? This is kind of an upward sloping flag type pattern here. Pennant type pattern. Does it break to the downside and get us to the next move? You can see right here, 92K, 112. That's 20,000 points. Right here, that's your 20,000 point move I've mentioned here. We have another 20,000 points of energy here. Is it back to 112 or is it down to 72? Somewhere in that zone. We will see what we get out of this range here up ahead, but right now showing early signs of weakness. Can it find a bounce back up, or how does this thing play out? Not quite convinced that we're seeing a breakout right now. It's just down within the range. We could bounce back within the range. But whenever we are ready to see expansion, which way is it and how far do we go? Easy 20K of energy isn't within this range. Looking at ETH, this one's down 5%. This one has outperformed to the upside here as I move my drawing tool there. This one right here has found an early low with higher lows, and now a new FOMC key level, 33.94.5. The last one up here at 40.10 was offered. This one now being offered. Do we get that next rotation down? Do we get that next rotation? Again, ton of energy here, and keeping an eye. And what I've mentioned before is per market structure, we could rally as high as 36.50, and bears could still control the trend until proven otherwise. So right now, still fighting an uphill battle at the moment. Do we get that next rotation back down out of this range? If so, we could be making a move down toward the lower 2000s. If we get into this zone between 2000 and 2400, anywhere in that price structure right there could provide a double down the road when this market's ready to rally. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.